This is Smart Investing with Mike.wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike.wren.
Well, hello again, everybody, pressing play on this awesome podcast. You have once again decided to listen to another episode of the Smart Investing Show, where we try to take the topic of investing. Number one, we try to make it easier to understand. Number two, we try to get you good, relevant information on each and every show. And thirdly, we try to be entertaining. And with the entertaining portion, sometimes it's me. Most of the time, it's Mr. Chris Martin. By the way, I'm your host, Mike Wren, and Chris, on the other side of the table from me, he's the person that kind of really matters. He makes the show listenable. You know, if it was just me, I don't think it would be listenable.
No, I think it's 50-50 because I don't know what I'm saying.
And you think I do?
I make you sound better is my job.
Oh, okay.
So, yeah.
By comparison, then.
You're the face on the curtain, and I'm the little weirdo behind the screen. Maybe that's...
Okay.
We're both Oz. Let's put it that way.
So on today's show, guess what we have for you? I actually have topics written down. Hello. That's that's amazing for
one of your topics is Jay Leno, so that's probably when I'm going to go to the to the bathroom or something.
You just spoiled it. Okay, that's the fourth topic. That's the fourth topic.
Yeah, what do you got to talk about Jay Leno?
My daughter one day asked, why is he always wearing denim?
That's part of his thing, you know.
Yeah. But he's getting better. But anyway.
Is he?
Let's not jump to the fourth topic that's almost meaningless. Let's talk about the three topics. We're going to talk today about negative interest rates. We're going to talk about the public using words they don't know. And a public plea for input. Chris loves it when I pop the P's when we're
awesome. I was just sitting here watching the lines go up on the audio.
When he's watching these little needles go back and forth like he's looking for gold inside a mountain. Oh, turn back. I think there's gold over there. Yeah, public plea for input. So, when I sat down to do the show with Chris today, was it a question or a comment, or did you have it?
Let me...
You put it down, and it's like, was it a bad comment?
No.
Or, okay.
He does have a request, though. So
perfect. We take requests.
Okay. Ryan said, how do you guys not have more likes? I know, right?
I think that should be fairly obvious.
I blame Hurricane Dorian and Justin Bieber.
I blame us.
I still blame Justin Bieber.
Well, you know, like what Chris just said, he says, Mike, I don't think your demographic is really into Facebook.
I think that's it. I think that's a lot of it.
Well, it might be the fact that I don't have a Facebook. We have one for the show.
I run the Facebook, yep.
Yeah, but
the only social media you're really on is when someone Googles, who the hell is Mike Wren?
Yeah. But isn't that, I feel kind of fancy now. I bet you only other celebrities out there have people that run their Facebook. Oh, I can't be bothered.
Maybe that's it.
I can't be bothered to talk about myself on this. I have to hire somebody else to do it.
I'm a lackey that runs your Facebook.
Yeah, is that
he
all?
also tells us to keep it rocking.
Okay, cool.
Anyway, you could touch on why some stocks continue to rise while being unprofitable, and some who continuously profit don't see their stock rise as drastically.
It's the same reason for the likes. It's the exact same reason. It's the exact same reason that we don't have as many likes as you might think, Ryan.
That the people that own those stocks are too old to have a Facebook page?
Stupidity.
Okay. Yours was better.
It's just the simple word stupidity. Yeah, like Tesla. Instead of us talking about ourselves, why we should be liked, if we were going to do that, we'd have to run for public office, and we'd have to tweet. We'd have to be cutting edge in some way that would irritate exactly 49% of the people. So
okay.
We can do that.
I can do that.
Yeah, we can do that easier in multiple ways.
Challenge accepted.
So, let's take Tesla, for example, because Tesla is well known. Everybody's seen their car on the road. There's a lot of hype about Tesla, and what I mean by hype is stupidity. Actually, it's not stupidity. Here's the thing with Tesla. The Tesla car is expensive, and its range is 200 or 250 miles, which quite doesn't get you to Seattle or from Seattle. It kind of puts you right in the middle between...
Like 75% there.
Yeah, kind of in between where there isn't too much between here and Ritzville. How happy are you now? See what I mean? So but I imagine that the Tesla is pretty handy in other parts of the United States where the distances between significant cities are smaller. We do live out west where the cowboys are, where the buffalo roam and all of that, and Indians.
To be geek for a second,
yeah.
So tomorrow I'm going up to this guy's house in Elk Chattaroy.
Okay, that's enough.
But he goes, I hope you like company, and he filmed a mountain lion.
Oh yeah,
in his backyard.
Really?
Yeah.
Huh? He must live out away, or he must have.
Yeah, kind of in the woods
Yeah.
there. But yeah, that's not cool.
My folks live pretty away, and they've never filmed a cougar. Maybe they're just slow with the camera. I don't know. Yeah, it's hard to say. I'm impressed though. I don't think it's that easy to get a picture of one of those.
He's got one of those backyard camera deals.
Oh, motion sensor
Yeah.
like a game camera. That's why. Oh, he was stalking something. Yeah, cool.
Cool.
So anyway, back to Tesla. The cars, they're really damned expensive, and they don't have quite the range that people would like. And the big issue is that they don't make any money. The company, as of yet, hasn't made a profit, hasn't made a dime. Yet I can see the allure. I mean, think about it. If you had a car that had a bit over a 250-mile range, or if it had 250-mile range, 200-mile range, and was significantly less expensive, I think either one of those two scenarios, you're on your way to profitability sooner rather than later. And I'm a total piston car guy. With me, I'm right behind me, Jay Leno, Adam Carolla. I'm behind myself, I guess, the way I put that sentence. But yeah, the big car guys out there.
Grossest human centipede ever. I always thought kind of it was hipster hype.
What?
I own a Tesla.
It might
type
be.
Of thing.
Well, you
just
are
kind of more in the name.
Well, you have Seattle. You have that Seattle and Portland probably has the largest concentration of men that rarely talk to women without giving their credit card number first, and they wear some sort of plaid or flannel shirt that's one size too small, and can make a wicked good cup of coffee.
Spend more money on mustache wax than cable.
Exactly.
Oh, okay.
So when you have that kind of demographic, a cool electric car is just that, a very cool electric car. And Teslas are kind of, even to me, they're kind of cool, but oh my God, are they expensive? It's like the price of a Tesla. I can get 4 other cars that I really want, or 3 really, really nice cars that I would put in Mike Wren's cheap category of really expensive, stuff that I would drive daily. So back to Tesla. They haven't made any money, but here's the traction. Here's where things get different. I think that if a company could come out with a 200 to 250 mile range electric car, and they could make the thing where it would cost $15,000, I think that you would see them all over. Because $15,000, people would start to think, I can't even get the Kia that I want for $15,000.
Yeah, I could justify that.
And this car, it's 15. 15's a lot of money, but number one, I'm getting a new car. Number two, I never have to stop at Maverick again, and that cuts both ways with Chris, but that's a different show. And then
She wasn't there today.
and then you don't have the upkeep, because with an electrical motor, think of the little AFX track that you had of 30 years ago. Those cars don't wear out. You can put that track together, and that sucker's going to run. What I mean by that is an electrical car should have about less than half the parts to it to make it than a normal one, because you're taking there's so many parts of an internal combustion engine that you don't need. And the electrical motor is so much more simple that it makes the manufacturing process so simple. Or it could make it so simple. I say it when nobody else is doing it. Well, why aren't you doing it? I'm a genius. So
I just don't see myself going to Spalding's and finding the right electronic part.
Well, you wouldn't have to, because they're pretty robust parts. You're talking electrical tech, and you're talking airplane technology, and you don't have to replace stuff inside your PC very often or your laptop. It's wired pretty well. Yeah, it's mostly software issues. So anyway, the hardware of an electric car is going to be pretty strong. It's going to be pretty robust. Look at those older electric golf carts that keep on going and going and going. So, if you were able to make an electric car like that, say $15,000, 200-mile range, I think you would sell a lot of them. And I think the manufacturing process is simple enough that you would make a ton of money. It's just that nobody is doing that yet. Tesla, Elon Musk, he does everything big, and I understand that. He wants it to be big. He wants it to be cool. He wants it to be stylish. And I'm here to tell you that I could see somebody kind of taking over maybe not taking over the industry, that's too strong. But let's say making one hell of a splash like the Japanese automotive manufacturers did when we had the fuel embargo here, the fuel crisis, 1978, 79, 76, 77. Those little Toyota Corollas and Coronas that came over here, they looked like Mr. Magoo cars, but they sipped the gas and people bought them. And then when you add in that little Honda Civic that kind of had a submarine rear window a little bit,
Yeah.
Okay, those cars were amazingly well engineered for a carburetor and getting good gas mileage, and there you go. And I think an electric car doesn't have to be anywhere near as utilitarian as those. You could make it utilitarian, but you have that. Pretty soon you're going to have the price of electric bicycles coming down. You're going to see a lot of people riding those just because they're fun and they do away with hills. When you've got that electric boost, you don't have to worry about the hills. You're riding up a hill. I've got an electric bike. It's like, I'm not as fat and as old as I thought I was. I'm really hauling up.
Look at me go!
Exactly. And who cares if it's a mirage? It still feels good. The feeling younger and more in shape is a mirage, but the fun is not a mirage. So anyway, that's why companies that don't make money will continue to go up. And some companies that are profitable, they've gone down in price. It's because you have human beings involved, and human beings are completely irrational, and they just want to be in on a fad a lot of the time. By the same token, it's a fad to hate a company or an industry. Hating the cigarette industry now, the tobacco industry, and hating the oil industry is very much in vogue right now. It's one of the best things to do, followed quickly on their heels by the drug industry that somehow forced everybody at gunpoint to take opioid drugs. So you're going to see lawsuit after lawsuit now of states suing companies that had something to do with the opioid epidemic. And I think some companies did have something to do with it. But somebody like a Johnson & Johnson that they had to pay a big fine. I'm not so sure that I agree with that. Don't take that. I think some people might think it's a win when it's Johnson & Johnson just paying so many $100 million just to get out of it, just to say, just leave us alone.
Yeah, I can see it. Because it's more, they made the drug, but kind of wasn't the doctors that pushed it. I don't know. There seems to be a lot of hands involved.
There is a lot of hands involved. Number one, nobody makes you take the sucker. But I do understand that a lot of people have become addicted to it because of some medical, procedure that they may have had. There's just going to be a lot of people out there that get addicted to any damn thing. And once you start suing companies for that, it's kind of a slippery slope. But I get it. There's probably some, actually I won't say probably. In my opinion, I would say that there's a few companies out there that do have their hand in behaving badly. Not behaving like I would behave, but that, again, this show is about making money. It's not about being right or wrong, okay? We're not here.
Good or evil.
Yeah, we're not here to
preach. You made some money.
Yeah, we're not here to preach, though.
But that's why we had the last podcast is when you invested, morally, you had some companies that were like, well, I don't want to invest in cigarettes. Well, you can do this instead. And
yeah, exactly. But like I said, it's in vogue to hate some companies, to hate some industries. And that, in turn, gives you one hell of a good price on those said companies and said industries. You've got chemical companies, oil companies, and cigarette companies that have dividend yields of 4, 5, 6, and over 6%. You can't even get 3% on a 30-year Treasury yield. If you live in Europe, you have to pay somebody to buy a bond. And that's where I'll go to next. Ryan, this is the next step to prove how stupid people are. Why we don't, and again, this is all in answering Ryan's question. Why we don't have more likes? That will be the why. That can be the title. That can be the title of this podcast. So
like
Ryan,
this podcast.
Yes. So Ryan, thank you for that. Negative interest rates. Have you heard of them?
Yes, but only because of you.
Oh, really? Just because of me? You haven't?
I don't watch the news.
Okay, that's good. That's why you're kind of happy.
I look on the web, and then in my head is the anchorman talking to me. Other than that, I don't really watch the news.
Okay, well, what we have in the world right now is something that I'll go out on a limb that says it's never happened before, and people didn't think, economist-type people have never talked about it in their life. We've got in the world several trillion, I think over 10 would be the number, $1 trillion of government bonds. Most of them being in Europe, where you don't earn an interest rate on your money. It's a negative interest rate. Wait, what's Mike talking about? Has he not had enough coffee yet this morning? What's going on? So typically, let's say in the United States, it's not going to be an accurate number. I'm going to be off one direction or another. But a 30-year U.S. government treasury bond will pay you 2% per year for 30 years. And again, the number's wrong. It's going to be under 2 or over 2, something like that. I think it's like 2.3. But just for
the sake of argument that we're too lazy to look up,
exactly,
take those numbers.
Too lazy to look up ahead of time. And it changes every day a little bit. So you're going to earn that princely sum of 2% or more for multiple decades in the United States. What would you earn in Germany if you were a German citizen? You live there, you're a citizen. Their government bond is, or if you were in the Netherlands, if you're Dutch, if you're 7 feet tall, you're going to not get an interest rate for that 10, 20, or 30 years. You're going to pay them money.
But Mike, why would I do that?
Because you're stupid.
Oh, okay. All right, then.
Or you're in the mafia. The only other time that I've seen this work is the mafia, where you have an oodle of cash from doing something illegal. You take it down to, give me a name, Rocky. We'll get an Italian name. You take it down to Rocky that runs the butcher shop somewhere in Manhattan. Or Midtown, maybe in the Bronx, some butcher shop, and he'll keep your money for you, this big stack, because you've learned it in an illegal way, and you can't take it to the normal bank because the bank would pay you interest on it, but they kind of are going to maybe flag your account with so much cash. Yeah. You come in looking like a Russian with wearing an Adidas tracksuit and carrying 5 backpackfuls of hundreds. That kind of raises an eyebrow.
I won a football bet.
But Rocky at the butcher shop won't do that.
Rocky knows it's good for him. He's not watching anything.
Rocky's going to keep your money for you. He's going to give you the money anytime that you request it. And he's only going to charge you a very, very small sum to keep it safe for you. That's what's happening when you have a negative interest rate. You are so stupid or so not thinking of the world that you are giving your money to somebody much worse than the mafia. You're giving it to a government official.
And Chad will keep your money now.
Exactly. You're giving it to a government, politicians that do nothing but try to get likes. Again, perfect, Ryan.
Go.
You set the show off perfect. So you're giving your money to politicians. And they are winking at you and say, we'll keep this for you. and we're only going to charge you 0.5% per year as a fee to keep it. And you say, okay, because you are limited mentally. Why on earth would anybody do that? Because they're scared of everything else, I guess.
Oh, it's more of the better the devil you know.
Maybe.
Type of thing.
I don't think that way. And there have been some economists that have said it's only a matter of time before negative interest rates come to the United States, to where when people own a treasury bond, they're going to have to pay the government to keep their money for them. That's literally what is happening. Now can you see why the economists of days gone by would never even imagine this happening? Because they were unable to predict the level of stupidity of the human race.
Challenge accepted.
Yeah, exactly. My father is one of those that is not one of the people that's afraid to predict the stupidity of the human race. There have been people, if you look it up in news articles, I'm sure it exists on the web, there have been people that have put up fake rockets in the middle of fields, said that this rocket is taking you to your insert spiritual being of choice, insert your favorite God here. And people have bought tickets on those things.
Yeah.
See, okay.
I can't argue with you.
Yeah.
I've seen those stories.
So if you have people that are doing that, I think it's not that far of a step. It's nowhere near a leap. I think it's a very small baby step where people are so worried about their own future that they're willing to pay a government to keep their money safe. Doesn't that just sound creepy, me saying it? Because I was trying for 2-3 days thinking about how to talk about this on the podcast to try to get some sort of theoretical thing that really was never supposed to happen, that's happening right now with about $10 trillion. How do I get you, the listener, and you're not average because you're listening to this podcast, so the above average podcast listener, how do I get you to understand how weird this is and how stupid?
It kind of reminds me of like when the bully comes over to you and goes, you have $100. Well, why don't you let me hang on to that? I'll be all right with it.
Exactly.
Let me hang on to that.
Exactly. Now, here's another way to look at it. People typically don't want government debt because the government has to pay it back. Well, if all of a sudden the government's making money on the debt that they have issued to the shareholders, they get extra. They get to take a piece of that money that the bondholders have given them as their negative interest rate or as their fee. So all of a sudden, a big 10 trillion bucket of money that had to be paid back, all of a sudden now it's a frickin' profit center that they're actually getting a fee.
But Mike, if I were getting rich off of debt, the last thing I would do was want to get rid of that debt because then I wouldn't be making any money, correct?
Well, it might end up to be that way. But anyway, this is how bizarro world it is. This is truly, truly, truly bizarro world. What type of human being, what type of corporation would give their money, what type of any entity would give their money to a government entity and have to pay for it?
Is there for businesses or anything? Is there any type of tax?
No, think about it. It doesn't make sense. It's just, we're finally to the realm of common sense where it's very, you're a dumbass.
Why did you get hit in the head?
Yeah.
There has to be a reason. Nope, no reason.
So anyway, there you go. That's how weird the world is. Let me add on top of this that for the last 13 or so months, you could say 7, 8, 9, 10, 11, 12, 13. I left my note upstairs. I could actually go get it. But you're talking about people in recent history, in the past months, say 6, 7, 8, 9, or 10 months, they have been taking money away from good, well-run companies domiciled here in the United States. I think I'm talking slow, but it's just I'm sorry if the podcast is kind of getting boring from my speech cadence. So people are taking money. This is not as stupid as giving your money to a government, but damn near. It's right. It's like
We're parallel roads.
Yeah, exactly. You're taking your money from well-run companies that are based here in the United States or based in Europe and based in Asia. And you're giving that money to bond funds. The bond funds don't own negative interest rate bonds inside them because of course that's not going to be good for the shareholders of the said mutual fund. But you have people that are so negative out there right now that they're adding more money to bond portfolios without even thinking because of fear, because they're trying to deal with their own emotions and they're scared of something. They're scared of the media saying that this has been the longest stock market recovery in history without a down market. That right there is a wrong statement because there was a down market, I think, last year from December to January where the market dropped 19%, 19.6 or 19.4 on a closing basis and recovered it a month or 2 or 3 later. That is a bear market right there, everybody. It was very, very quick, very, very severe, I guess, to some people. I had a few clients calling me saying, my account's down a lot. And it's like, it is? Oh, I guess it is. Okay, well, what's the matter? Well, what do you think the matter is? They go crazy. And then all of a sudden, they go to sleep for a few weeks. They wake up and everything's fine again. So there's obviously a huge amount of fear and negativity going on out there. And I don't know where the hell it's coming from. But it's making people do weird things. Really weird things. Like giving their money to a government and having to pay to do so to keep it for them. They're not getting an interest rate back. They're going to give $10,000, and in a year's time, they're going to get back $9,900. How is that a good deal? Or $9,800, or even if it was $9,995. So they only gave $5 away to keep the $10,000 safe? Are you kidding me? Seriously. What planet do you live on in your head? So there's a lot of fear out there. And when the media says this has been the longest running recovery, they hype the hell out of that it's been the longest running stock market upturn because the corollary is when it finally does go down, oh my God, you're going to get the shit beat out of you. Look out. It's going to be worse than it ever has before.
Breaking news.
Yeah, if it's gone up the longest that it's had, but that means when it goes down, oh God, it's going to be a doozy that I can't even predict because I can imagine a lot because I can still remember 2007, 2008. In a couple more years, couple more Super Bowls, I will not be able to remember that down market. But me, stupid lizard brain human, I can still remember that negative, super painful event. I want to avoid that. Yeah, I'll take that. I'll take that deal. You'll keep my $10,000 and you'll only charge me $5 a year. I'm there. And it doesn't look that stupid sometimes right now because in certain areas there isn't as much maybe inflation as people think there is, but I think milk is about the same price for a time.
Yeah.
I think a lot of the major foodstuffs, it's kind of the same price. I know green and red peppers, they're sure a hell of a lot more expensive than they used to be. It's like
avocados are
they're like $1 expensive. A piece. So you have the economists out there saying that inflation is dead, but the price, I can see that the price of gas hasn't gone up in a while. I can see the price of major food items maybe hasn't gone up in a while. I'm not going to go out on a limb and say that inflation is dead. So you still would need to earn something, but that's what people are acting like. They're acting like they're so fearful of a negative event in the stock market that they don't want to be in the stock market. And prices, I guess, for them, I guess they haven't tried to buy a house in Spokane lately, but I mean, the prices that they deal with have been going up so slowly that these humans don't even care if they make a real rate of return on their money. And none of this makes sense to me. None of it. It's like, and when things don't make sense to me, something is wrong because I'm one of the most reasonable people out there, and I've been doing this long enough, and I have a strict enough moral code when it comes to looking at money and managing people's investments that a lot of the time I've gotten to the point where if I'm giving somebody advice and they want to debate it, I walk away. because I've got experience. If you want to debate my experience, I'm not going to go down that road. Go talk to somebody that's going to try to prove their worth with charts and facts and figures. I can look up charts and facts and figures, but frankly, I don't want to take the time. If you are going to be that difficult to become a client, I don't want you. Go work with somebody else that really is going to work hard at getting you to like them. Me, I want you to like me, but by first and foremost, I want you to trust me.
Right. The worst thing anybody can, why should I trust you? Well, I'm not your teacher. I'm not going to educate you.
Yeah.
You go look it up yourself.
Exactly. Go work with somebody else.
Don't be lazy.
There's tons of people in my industry that would love to have you. I'm not one of them. So
they also have a big binder of cassettes that you need to listen to. And
here's the second topic of this podcast: using words you don't know.
This is every day. You don't know how many red squiggles I have underneath everything that I write.
Okay, when folks in the public listen to business radio and watch business TV, and if they're listening to the news at all, stuff gets bastardized 6 ways from next Tuesday every single day. Here's a tip. When you're talking about your investments to me, okay, I don't really care if you talk about it to somebody else, but it might help if you talk about it to somebody else. It actually will help yourself if you get in front of the mirror or if you turn off the radio in the car and talk to yourself a little bit, but talk to yourself in a realistic way. Not too good and definitely not too bad like self-loathing, because that is the least helpful. Talk to yourself in a very accurate way and say, oh, you heard this news item that the market's gone up for more than 10 years and that, boy, the next downturn is going to be a difficult one. Wipe away all those words that you have floating around in your head and just use the simple words that an 8, 10, 12, 13-year-old would use. Tell me how you feel. Instead of you trying to take some economic word or economic topic and spin it into a way that tries to make it sound more money-wise, you don't have to make it about money when you talk to me. I already know that there's fear out there. There's always fear. Sometimes it has no bounds, and you need reassurance. So it's extremely helpful for me if you don't try to throw up the smoke and mirrors of throwing these random adjectives and nouns from the economic industry and from Wall Street. Just tell me that you're uncomfortable. Tell me you're afraid. You have a feeling of uneasiness. You have a feeling of anxiety. That is all I need. I'm off to the races. I'll start asking you questions. We'll get to the bottom of it fairly quickly. And guess what? What's nice is you're not deluding yourself that you know what those economic words mean. You're just bringing up the words that you do know what they mean. I have anxiety. I have fear. I am not comfortable. I am worried. Those are perfect words, and we all know the meaning of them. It's very, very, I think it's very cleansing. So if you talk to yourself in your car that way and skip all of the economic jargon, I think that you're going to, right then and there, you're going to have a little bit better handle of your own behavior and emotions, because there is a disconnect. If somebody was truly worried about the economy, they would drive to Costco and expect the parking lot to be empty. They would drive to Walmart and expect the parking lot to be empty. They would think of maybe not paying their Verizon or T-Mobile bill. If they thought the economy was that bad, they would be buying less. They would be doing less activities that cause them to spend money. But you noticed I said driving in your car. If you're driving in your car, burning fuel, going to shop at Costco, and you tell yourself that if you don't throw any economic jargon out there, if you tell yourself, I'm worried about the world ending monetarily, and you can't find a parking spot at Costco, the anger that you're feeling of not being able to find a parking spot may override the fear. And then you're wondering, well, where the anger come from? Where did the anger come from? And it's because the parking lot's too full. I think at some point in time, You might be self-aware enough, if you're lucky, that you might realize, I'm worried about the economy crashing, and the parking lot of Costco is completely full.
But my narcissistic brain is thinking, these idiots don't know what I know. And they're all just out here shopping, and they don't understand that the economy's crashing. Morons.
I think I think you would be the person driving by Costco saying that. I don't think
laughing at them.
Yeah,
idiots.
I don't think that you would be in the parking lot looking. You see what I mean?
Yeah.
I think
I'm going to go home and eat my spam and understand the market's crashing. These idiots are buying cakes and pies.
And by the size of all the parking lots at Lowe's and Costco, there's not that many people driving by saying that. They're pulling in.
Oh, yeah.
Yeah. So what I mean is there's this disconnect of people's behavior of their economic life and their feelings and emotions inside their head. There's this huge disconnect. And I'm just telling you, pay attention to what you're feeling, communicate that to me, and then also pay attention to what you're doing. I'm having a hell of a time losing weight. And I know, for example, that I must have eaten 400 calories worth of Lay's barbecued potato chips watching a bicycling race on TV last night. And as I'm putting in like the 15th little fingerful, it's like, this might be why the weight's coming off so slow. Literally eating potato chips, wishing I was thinner. That is a perfect analogy of somebody worrying about the economy ending as they're walking out of Walmart with a full shopping cart. You see what I mean?
And a cup of popcorn shrimp.
Okay, hold on. Dear Diary, Chris likes popcorn. So with that, that's the basic of the show, is that negative interest rates, I wanted to get that out there to tell you how weird it is. And when you have economists and when you have journalists trying to explain it to you, they're not going to explain it commonsensical enough. I will. Then, number 2, using the words that you don't know. Don't use any economic words when you're trying to discuss how you're feeling about your money. They're not useful. Use just the emotional ones. It will help me a lot. It will probably help yourself a lot. The third item, very quickly, a plea for input. If you're listening to this podcast, please take a moment in the next week to 10 days and tell us in a very quick, just the most briefest note that you can think of. So it requires the least amount of effort on your part. Send us an email or leave us a comment about a topic that you would like to talk about, like me to talk about. And it could be just 3 words. Talk about historical downturns. Talk about this, or you could just say tobacco companies, or it could be 2 or 3 words. We'll decipher it and talk about it. Because when we're not on the radio live, we don't have any input unless you leave us input. We don't have any live telephone callers to be able to gauge the temperature out there. So if you're bothering to go through the trouble of downloading this podcast, please send us just a quick, the briefest missive. Don't tell us how we're doing unless you want to. Just tell us what you want to hear about, and we'll endeavor to get that.
What I'll do is in the show notes, so when you download this, just scroll down just a tiny bit more, and I will leave the email, which is usually always there, but then I'll also put a link to the Facebook page.
Okay.
So if you have a Facebook page, you can just post it on there, and I'll see it.
Yeah, and this is not a plea for you to rate the show. Rate it, whatever. We're going to be doing it no matter what you say, and we don't have to please any sponsors because, truly, who would sponsor the show? So we don't have to worry about pleasing anybody.
I'd like to thank Chico's Bail Bonds for sponsoring today's show.
Exactly. I just want to make sure that I'm not repeating myself too often, and if there's topics that you want to hear about, let me know. I'll bring them up and talk about them. And why I had Jay Leno written down, Jay Leno's car show on TV, I used to find it kind of unwatchable. It's getting better now. There's always times in the show that are more corny than you can even imagine. But he's kind of coming into his own on that Jay Leno's Garage, which is on cable. And if you are into cars and if you like some good television, it's pretty good content all in all. He's got some better celebrities on there. Like I said, be prepared 2 or 3 times each show. It's more corny than you can almost stand, but luckily those times are brief.
Okay. I'll have to take your word for it.
Well, you're not a car guy.
I'm not a big Jay Leno fan.
Neither was I. I typically, and of that, if there's 6 of those garage shows out there, maybe I'll only like 5 of them, but he's got some nice cars on there. He had Adam Carolla on there the other day, and Adam Carolla was saying, Jay, don't ask me too much about this car. It was some rare racing Porsche. He says, I'm not big on details. I'm just the rich asswipe that happens to own it. And that is verbatim. That's what he said. And so
that I can respect.
And when Jay Leno can have a guest like that on a car show, because car shows people are always full of themselves, these people aren't. It's pretty funny.
We constantly have, because it's the one thing that doesn't offend anybody, like news or something, is there's always these car shows on.
Yeah.
And here's every car show. So thanks today for coming today. Mike's going to go ahead and we're going to refill this carburetor and it's going to be awesome. Mike, what do you think? And then they always pan to the one guy who is not camera ready, looking around. Yeah, we're going to fix the carburetor today.
And if it was me, that'd probably be me eating some taco time in the background.
Or there's always, I don't know if we're going to get this done today. Go to commercial. Exactly. Oh, surprisingly, they got it done today.
So I'm Mike Wren. That was Chris Martin speaking. This is the show Smart Investing. Thank you for listening. We'll be back again next week.
And don't forget, look at the show notes if you want to contact us.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances and, if necessary, seek professional advice.